Hi, I'm Yvonne.
And I'm Marge.
And we are going to discuss
the impact of import and export trading to foreign exchange in the Philippines before and during pandemic.
The contents of this presentation are the introduction, statement of the problem, conceptual framework, and methodology. You can also find here the results and discussion, conclusion, and recommendation at the end of the presentation.
The Philippine economy is one of the most active markets in the East Asia Pacific. One of the determinant factors that affect the economy is foreign exchange. Foreign exchange, or Forex as defined by Investopedia, is the conversion of one's currency into another. So Forex plays an important role in the country's economic stability. It connects both local and overseas markets for the various goods and services arising from trading transactions. So it does not only determine the extent of well-being of those residing in the country, but also measures the country's wealth and stability. Also, through Forex, we can be able to compare the prices of all assets, goods, and services which can affect the inflation or deflation rate.
Many factors affect the behavior of the foreign exchange market in a particular country, one of which is the balance of trade. Britannica defined balance of trade as the difference in value over a period of time between a country's imports and exports of goods and services. Import pertains to purchasing of goods and services from foreign nation to home country, while export is the selling of goods and services produced domestically to foreign countries.
This research aims to answer the questions: what are the effects on the increase of imports and exports before and during pandemic? Number 2, what is the effect of pandemic to foreign exchange rate? And number 3, what is the relationship between foreign exchange and balance of trade? By answering the 3 statements of the problems, so we will be able to help the future legislators and lawmakers to have a deeper understanding of the country's economic market in order to stabilize the balance of trade by decreasing the number of imports and increasing the number of exports. So it also aims to develop future references for the development of various programs that will continuously boost the market activities in the Philippines.
In our conceptual framework, we have the foreign exchange rate, imports, exports, and balance of trade as our input. We process the gathered data in our throughput, where we do the analysis of statistical data and information to come up with our output, the impact of import and export trading to foreign exchange in the Philippines before and during pandemic.
Research method and design. So this study will use secondary research method, which is to utilize existing data. Secondary research includes materials published in research reports and similar documents. So these available data will be summarized and collected to increase the overall effectiveness of research. So with the use of this method, the researchers will gather the existing data from the websites of government and non-government agencies and expect to find supporting evidence to this study. Research instruments. So the researchers will use secondary instrument in gathering information for this study. So they will collect secondary data that are already available and analyze it. So it can be from magazines, newspapers, books, documents and trade journals, government publications, public records, historical and statistical documents, and also data from reliable websites.
Based on our study, we can conclude that the Philippine economy is a dynamic market in Asia-Pacific. However, economic growth slowed down for 2 consecutive years from 6.7% in 2017 and 6.2% in 2018. One reason for this is export growth slowed due to weak global trade, and private consumption growth decelerated because of high domestic inflation. In line with other currencies in the region, the Philippine peso also depreciated by 4.3% in 2018. In the first semester of 2019, economic growth slowed to 5.5% compared to the same time in 2018. The economy continued to improve in the second semester of 2019 until early 2020.
The economy continued to improve in the second semester of 2019 until early 2020. However, due to the outbreak of coronavirus disease or COVID-19 in March 2020, the economy declined by 0.2% compared to March 2019. So in the first 3 quarters of 2020, COVID-19 pandemic caused the Philippine economy to diminish by 10% over the same period in 2019. So the number of daily COVID-19 cases rise from an average of 1,400 in December 2020 to nearly 10,000 in April 2021. So after a few months of loosening, authorities had to implement tighter restrictions in most affected areas in order to ease the situation. So however, the quarantine and movement restrictions have affected the economic activities, resulting to 4.2% drop year-on-year in the first quarter of 2021.
On the third quarter of 2021, despite the second wave of COVID-19 due to the Delta variant, the Philippine economy started to improve and expanded by 4.9% from the first 3 quarters of the year, recovering from a 10.1% decrease over the same period in 2020.
So as you can see in figure 1, so it displays the trend of imports and export value in the Philippines for the past 5 years. So based on the above data, so we can see that the foreign sales exhibit continuous increase while purchases to foreign countries slightly decline at the third year and increase for the last 2 remaining years.
As exhibited in Table 1, the country's total exports in December 2021, amounting to $6.27 billion, increased at an annual rate of 7.1% from 1.9% in 2020. In December 2019, before the Philippines had its first COVID-19 case, total export sales increased at a rate of 21.4%. Total imports in December 2021, which amounted to $11.48 billion, increased at an annual rate of 38.3%. The total import marked its abrupt growth. In December 2020, the annual increase was only 1%, while in December 2019, imports value decreased by negative 7.6%. In December 2021, the country's total external trade in goods amounted to $17.75 billion, which indicates an annual growth rate of 25.4%. The total external trade manifests its continuous growth. In the last year, the annual increase was faster at 25.4%. Of the total external trade in January 2021, 65% were imported goods while the rest were exported.
So the table shows the summary of foreign exchange rate for the past 5 years before the start of COVID-19 pandemic, during its outbreak in 2020, and the period of recovery in 2021.
Based on the results of data gathered during the outbreak of COVID-19, the value of peso strengthened with a decrease of Forex rate from 52.52 to 48.06, but weakened during the recovery period at 51.08. External trade performance also showed a continuous trade deficit for the past 5 years, but the deficit was lower in the year 2019 and 2020. Strong peso during that time was not good. Because of the pandemic, Filipinos lost their jobs and income. As a result, they halted buying imported stuffs, especially at the peak of the pandemic, when the country was in great need of various pandemic response equipment such as face masks, alcohols, protective suits, gloves, and others. Imported products, which has a much lower cost than those of the locally produced one, has lowered the demand for dollars to pay for goods and services, resulting to the increase in the trade deficit of the country. However, in the year 2021, the exports slowly rise as businesses innovate their marketing strategies and embrace the technological advancement that online platforms can offer. Businesses were able to open their market segment into a much bigger capacity. This enables them to introduce their products to the market and even do exports to other countries.
In this current situation, we recommend that the Philippine government strengthen its ways to increase exportation and decrease importation. Also, they may strictly impose tariffs and taxes to control importation. Prices of domestic products may also be regulated. Subsidies may be given to local businesses to lessen their expenses, so this will lower the price of goods and services and attract consumers to patronize locally produced products in the country. So this may also increase exports as less expensive products attracts foreign consumers. So the Philippines can also enter into trade agreements with other countries where there is a regular trade to support economic growth.
If Filipinos patronize local products more than imported goods and government efforts to respond to the current market situation, at least a factor affecting the foreign exchange as well as the economy will boost.
That ends our presentation. Thank you.